Inflation just keeps climbing. Food is expensive, transport is wild, rent is crazy. So the big question is, how really do you invest in this kind of economy? Well, here are 3 investments I would still make in a high inflation environment. Hi, my name is Ola. I'm a finance professional with over 15 years experience in securities trading, investing, and economic analysis. On this channel, I break down personal finance, investing, and the economy in simple English. So if this is your vibe, please hit the subscribe button and hit the notification button also, and always stay tuned to our fresh videos every week. Now let's talk about inflation. Think of inflation like a car speeding on a highway. It could go in at 30 kilometers per hour or 150. It depends on how much pressure you put on the accelerator. Now, picture the central bank as the agency trying to slow it down when it's trying to hit 150. So at 30, central bank will be trying to say, move up, you are too slow, we need to move faster, right? But at 150, the central bank is trying to slow it down. And what could central bank do in this scenario? Throw speed bumps in on the road, set up rumble strips, set up speed limits, anything they have got, but they will try to slow it down. But this isn't a Bugatti we are talking about that is trying to express itself. It's not really that exciting. Why? Because it's the cost of living and it's getting higher. It's getting higher. And the faster it moves, the harder life gets for people, right? And so what does inflation do to your money? The first thing that it does is that it reduces your purchasing power. 30 million 10 years ago would have got you a brand new car, fund a family vacation, pay your rent, and there'll still be change. But I kid you not, 30 million naira today cannot actually buy you a brand new car in Nigeria. That is how bad it can get. That's the impact of inflation. It also shrinks your long-term goals, meaning, oh, I have this dream car, I want to live in Ikoyi, I want to do all that and all that. After a while, inflation and the price increase just makes you feel like this is getting further and farther away, except you fight for it. Yeah? It increases the cost of waiting. And I mean, the longer you delay in investing, the longer you delay in buying anything, it just gets more expensive. That's just what inflation does. And the final thing is that it discourages traditional savings. Very high inflationary levels, keeping your money idle in a savings account is actually a losing game. It's like you are running on the treadmill, you are sweating, but you are not going anywhere. It's not funny. Okay, I stop laughing. But yeah, that's the reality. And it's important for you to have that picture. That's actually what's happening. Now, when it comes to inflation and investing, so there's a massive myth I've heard a lot of times from people. I've heard it so many times. And it is this: if returns are lower than inflation, then there's no point investing. I think that's very wild, because imagine you are in a small boat and it's leaking, and there's a bucket nearby. But you say, well, the boat is leaking anyway, so what's the point? Instead of scooping water to stay alive, I'll be watching as the boat drowns. Is that an option? Yes, the goal is to patch the leak in order to get to your destination. But scooping actually buys you time. It keeps you alive. This is one of the most paralyzing myths I find for people living in high inflationary environments. Yes, ideally you want your returns to exceed inflation. But if it doesn't, why would you say that you are not investing? Explain. So you see that money with, I think you need to subscribe to this channel and also subscribe to our newsletter. Link is in the description, so that you build your money with, because that reasoning, the math can never math. So if you're not going to invest, then you want to hold cash, right? Is that an option? Is that really an option? It's not. So even at whatever return that you are getting, you are preserving more value than cash sitting in the bank at 3 or 4%. Let's just ditch that thought first of all. Now, another thing I also need to highlight in this whole inflation is higher than returns conversation is that your investment strategy needs to be internally driven and based on your goals, and not driven by external noise that you can't control. What do I mean? If you have a goal to get a certain amount of money or have a certain amount of valuation in a certain number of years, you sit down, you ask yourself, what do I need to do to get here, right? And you go for it. You can't now say that because of something happening outside that you have no control over, you're not going to go for that goal. The math again, does not math. So if you haven't already, subscribe to our channel, share this video with a friend that you've had a discussion with, be a good friend. Thank you. Now, the 3 things I will still invest in, even with inflation this high. Number 1, bonds. I know you're like, are you joking? Why would you invest in bonds? Yes, as an individual, I would invest in bonds. Now, if you don't know what bonds are, please drop in the comment section so we know how many people would like for me to create a video on bonds so I can explain it in more detail. But yes, the good thing about bonds is that rates go up when inflation goes up. Now, apart from that, that's not the only reason why I would buy them. Bonds give me cash flows. They guarantee a return even in all the topsy-turvy uncertainty. And finally, they are long-term. And I think for me, that's the most attractive thing. They are long-term, meaning that yields will come down one day. As much as we think, oh, high inflation environment, it almost feels like the world's about to crash, but the economy is always in cycles. There's somewhat a 10 to 12 year cycle, and then it starts again. Such that these yields that you think are so high, they are going to come down one day. And guess who is going to be sipping tea with those high returns when everybody's hustling and struggling with 4% and 5% return? Yeah, the person that went in, especially as an individual who is not thinking about daily valuation, price movements, all those things. There is no reason why, if you can, you don't have bonds, 10-year, 20-year bonds in your portfolio. That is what the pension fund guys are doing for you guys. There is no reason. And the inflation is a thing too. So there's no reason why you shouldn't have that. The second thing is stocks. A good company would grow as prices generally rise. So I mean a good stock of a good company. What do I mean by a good stock of a good company? A good company first. A company that is well run, a company that is positioned strategic to ride and rise with inflation. And then a good stock, because some companies, their stock is disconnected from the company. You can have a good company, but the stock is just blah in the market, right? So a good stock of a good company is a good combination to have, especially one that pays dividend. That's a win-win. Now, why I'm going to talk about this whole dividend cash return thing, right? And why it is important. So on stocks, I would say look out for defensive stocks and businesses that have a strong pricing power. What do I mean? That they can adjust their pricing and people will still buy. For example, fuel price. If fuel price goes up, if fuel price comes down, you will still have to buy. If data cost goes up, if data costs come down, you will still have to buy. If call costs go up, call costs come down, you will still have to make calls. There are some companies that are positioned that they are essential to our life and living right now. Those company stock prices will adjust with inflation, except the regulator tries to hold them. And after a while, like we have seen in Nigeria, after a while, the regulator still has to adjust. You understand? And the final 3, cash investment. What do I mean by cash investments? So there are different opportunities that come, but the most important thing is that these things bring in cash daily, like food business, like transport, like water, like downstream energy, like the filling stations. What am I saying? In a high inflation environment, cash is king. You need something that is generating cash for you, right? And so if you have any of those opportunities, the woman that sells puff by the streets, you understand that every day she puts in money, she sells before she leaves that place. Or the woman that sells akara, she will sell before she leaves that place. And what she does is that she would look at the cost of what she bought that day. She will factor it into her pricing or the sizing of the akara. She will sell her market and she will go. Why? Because you must eat on your way to work. Do you understand? So those are the kind of investments that I would do. Now let's talk about this whole cash thing, right? It is where the magic actually happens when it comes to investing and beating inflation. Why? There's something called compounding. If you buy a 10-year bond at 20% and you invest 1 million in that bond, every year you'll be getting 200,000 naira. Now, if you eat that 200,000, all well and good. But if you reinvest that 200,000 every year, do the math. Over a period of 10 years, you would have gotten 2 million in cash flow. 200,000 every year for 10 years. That's 2 million, right? Now imagine reinvesting that 2 million over that period. I kid you not that instead of you coming at the end of the 10 years with your 1 million principal and those 3 million, you probably be heading towards 5 million in returns. in valuation at the end of that same 10-year period. It's the same thing with everything that brings cash to you. The moment you are getting cash today, reinvest it in something. That is how you beat inflation. It's not by sitting down and putting it into one thing. It's about compounding your return such that I only put 1 million into this transaction. I only put 1 million into this investment. But by the time I was done in 10 years' time, I had 5 million, not because I added fresh money, but that the returns that were coming from that bond, I put it back into an investment opportunity. That is how you actually beat inflation. Now, so if you are someone that has said that I'm sitting on the fence, I'm waiting it out because inflation is eating into the value, there's no point, inflation is higher than the return, so what is the point? Please rethink it. The actual way to beat inflation is by compounding your returns and not sitting on the sidelines. So if this has been helpful, please like, share with a friend, hit the notification button, subscribe to our newsletter, and don't forget that you can't outsource your health and your finances. You have to engage. No one can go to the gym for you and you'll be fit. No one can eat vegetables on your behalf and you'll be healthy. The same way you can't outsource your health and your finances. See you in the next video. Bye.